Good morning and welcome to the XM.com weekly market update. And with me again is Peter Mcguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
China.
What do you say?
Well, they're stimulating.
They certainly are. It was very stimulating yesterday with the market up over 8% for the day.
Yeah.
Just mind-blowing.
Yeah, it certainly was. But once again, sorely needed.
Yes.
The economy is really struggling up there. So we had the GDP numbers on that chart there are fairly constant over the last few quarters, but the PMI numbers were down again yesterday, sub 50, which is not ideal, but there's plenty of issues up there, hence the movement by the government.
Sure. I mean, those days of, the 7s, 8s, 9s, 10s and 12% growth numbers, GDP, I think I don't know whether we'll ever see it again in my lifetime.
No, well, and once again, so much of that was on the back of infrastructure projects.
That's right.
Over a long period of time.
Exactly.
And you can only build so many buildings and railways and bridges.
They've proven that, 90 million apartments and homes that are uninhabited.
Yeah, so which is not great. So, and once again, we had that drop of interest rate. So the chart here, if we look at this chart on a 1 week or 1 month basis, it's gone through the roof. But I thought, let's have a look at over a 10-year period.
It tells a good story.
Yeah, so clearly up substantially yesterday, which is a good thing for the equity markets, but there's a lot of stimulus there from the government.
Yeah, China's shut this the rest of the week, but one of the markets was up 22% for September. If you want to have a look and for all the traders out there, and everything was sold off yesterday. Big sell-off across Taiwan, Japan. Many of the Asian bourses were really hit hard, and then you had China through to the roof. So. Yeah, and where we go? Well, it's just, this composite index is a great one to look at, the CSI 300.
And I think also those Asian markets have been very strong for quite some time as well, particularly Japan. There's nearly, you could sense there's a rotational money out of those markets into China on the back of this. Yeah,
and you were saying something as far as before we started the show, and, government buyback of company stock. And the issues that faces from an investor standpoint and hedge funds and do people say that it's a true performance, or is it, all government led?
Well, it seems to be government led. If that's what they're doing share buybacks, or the government giving the companies money to do share buybacks. Share buybacks are a good thing, obviously.
Yes.
But to get the money from the government, which is it a loan? Who knows? I don't know. But yeah, not ideal.
Or does the government end up owning the stock?
Well, something's got to give eventually. Yeah. That's not the traditional way you do it. But
no.
Time will tell with China. So over to the US, we had the GDP numbers out last week as well. Another strong number, higher than expected. And once again, we've said it many times, the resilience of the US economy.
Yeah, well, the numbers don't lie in that regard, US GDP. So yeah, fairly strong. And
once again, we had the interest rate cut as well.
Yep.
And it looks as though the next one will probably be only 25 basis points.
Well, this is
spoke overnight.
Yes, he's saying that it looks like it's going to dial back, but they still, we're going to get that an extra 75 by end of year. You've only got 3 months today, and it's 1st of January. So today's the 1st of October, and I think this next 3 months will be very telling on many different processes across the global economic landscape.
Yeah, it'd be interesting if they did another 50 points. They very rarely do 0.5%, only in pretty extreme circumstances, like in the global financial crisis, etc. That was happening, which was understandable at the moment. You've got an economy which is pretty strong. The labour market's holding up reasonably well. Is there a need for another 50 points? You wouldn't have thought so.
No, but we'll have to have a look and see what the NFP is. You've got unemployment this week on NFP, non-farm payrolls on Friday. Here we are.
So those numbers will come out. The unemployment rate will be fairly static, I would have thought.
Yes.
NFP, they can jump around a bit, so in revisions and whatnot. So they come out Friday, I think it'll be this week.
Friday.
So we'll keep an eye on that. And obviously, I think that is a much bigger focus on the Fed at the moment, the labour market,
100%.
rather than inflation. So,
yes, definitely.
Yeah. Interesting chart here. I thought there's a lot of talk about hype in the equity markets at the moment. Are the tech companies in a bubble, etc.? So this is the IPO count of tech companies only, going back to late 1990s. And as we can see, around 1999, 2000, the tech, the internet bubble, etc.
Absolutely.
Every man and his dog was
Yes, and designing a website and saying it's got revenue.
And most of them no longer exist anymore.
No, or the good ones, they certainly do, or they've been purchased and rebranded and typical M&A.
Yeah. But you fast forward to today, and there's been very few in the last couple of years, which is interesting. So you sort of think, well, you can sort of say share prices are high, but it doesn't necessarily mean there's a bubble there. If you had I think if you had a ton of IPOs coming through, then you'd sort of think, hang on, that's getting a bit too hot.
Frothy.
Doesn't seem to be the case though at the moment. So.
No, well, but we also do know that there's a select few of those AI behemoths have really carried the market forward. And, the likes of NVIDIA, and we all know the Magnificent Seven. So let's just see whether that is going to continue into 2025.
Yeah, or whether or not that rally broadens out a bit, which seems to be the case at the moment. It does seem to be not as focused on those companies, which is a good thing.
Absolutely.
So, yeah. And finally, oil. It has recovered a little bit, but still, it's considering what's happening in the world at the moment from a geopolitical perspective, it's pretty incredible to see where oil is.
Yeah, a couple of things on that. First off, we would have expected by now you'd see a war premium build into price. That hasn't happened. It's actually evaporated, and you've seen a downdraft, and there was every chance last week you may have seen a 66, 65 handle from West Texas Intermediate. But it's bounced, and there was also Israel, there was an attack on Yemen. Yep. In one of the ports. We all understand what's happening as far as Lebanon, and whether then you've got out here Iran and what they're prepared and saying they'll do. So again, why haven't we seen that war premium build in? I think it's just the great unknown to the energy sector. People are saying China slow down. We take that on board, but you're still producing 101 plus million barrels a day. And you've got Saudis now wanting to increase production. You've got Libya coming back online, I think, with 500,000 barrels, that is, a day. So all of that has to work through the market, and that could see softer prices. Yeah. Saudis made a point. They said, we don't want a $100 barrel.
Oh,
there you go.
You've got it.
Yeah.
But I think, once again, going back to the China story, with China really struggling.
Yes.
It's a huge market. So,
yes.
And I think in the Middle East, it's probably fair to say Iran has been very,
tempered?
Yeah, tempered, patient, and they clearly don't want a major conflict. No one does.
No.
So, but yeah, I think tempered's a pretty good way to describe it, and just sort of really taking a long, hard look at it. So hopefully that settles down, because it's not good for anyone. So.
No, well, the choke point through the Gulf of the Strait of Hormuz, and we all understand where that is. Dubai's there, and then the Strait, and so if they tie that up, that'll really change the footprint as far as price.
Yeah. All right. We'll keep an eye on these labour figures and the non-farm later this week. We've got a few. We're not quite back at earnings season yet. That's just around the corner again. So
yes,
in
exactly.
The States, it's all going to crank up again in the next week or two. So.
And we're now less than a month from the election.
Right,
a month and 4 days. The 5th of November, and
the
7th of November is the next Fed meeting.
Correct, yes.
So no Fed meeting in October. So, as we say hello to everyone out there all over the world, the most important thing is, markets are very frothy, and it doesn't go against the grain. Just look at insurance in the sense of hedging your stock positions or whatever you're in. So it's just being prudent risk management.
All right, we'll keep an eye on things and catch up again next week.
Take care, Andrew.
Thanks, Pete. And that's the xm.com weekly market update.